Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold, and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
ICE Brent crude oil futures. A bearish closing black Mariposa and bearish engulfing pattern, if only just on the latter, yesterday after the previous session's unusual key reversal. And that was a key reversal down. The market is still caught within the stratified and layered congestion stretching from 68.69 up to 72.29, with yesterday's cap being the top of that congestion at 72.29, and the market finishing up on one of the layers below at 70.67. Just below the bright green middle sign actually, which is currently at 71.33, and that's of the seeming recent showrunner for this market, the December-based bright green bullish Andrews pitchfork. Overhead we now have layered congestion at 71.29, 71 3/4, 71.99, and finally the December 23 low at 72.29. Meanwhile below we have support from this congestion at 70.13, 69.69, 69.27 and 68.69. Finally, we still have target X overhead at 73 1/4. This is the target for the doubling up of the break above the May and July 25 to January 26 bear channel. Now, 2 weeks ago this looked quite far, but now, well, not so much. So far today, a higher open, just under the May 23 low at 71.29, and a press on up to the 2020 high at 71 3/4 before coming back down below the May 23 low and the bright green middle time, but stopping short of the next support at 70.67. Now today is actually looking at the moment like a possible bearish harami right now. Spot gold. An immediate countering bearish harami and outside day yesterday after the previous session's bullish opening white Mariposa and fourth bullish white soldier. We had previously seen some large ranges in recent times, usually centered around the very recent late January to very early February 50% Fibonacci line at 49.99. Well, not so anymore, as last Friday the market punched up and away from this for a small peak higher yesterday before turning lower. Now, whilst not perfect, for example, it does not have the correct number of touches. There is, as I said yesterday, still a possible bright red February-based ascending triangle pattern, currently 49.72 to 51.13, which on Monday this week saw prices punch up through the top of it. This pattern has a primary target X in the 54.40 area, around where the 100% projected Fibonacci line sits at 54.48. with a harder to reach secondary target X1 up in the 55.80 area, just under the all-time high. As I said earlier, this is not a perfect pattern, so please bear that in mind, though the overhead area is fairly denuded of resistances for quite some while. In the bigger picture, we have the dark blue late December 25 to early February 26 bullish Andrews pitchfork, which I drew 2 weeks ago, and which I still consider able to show the potential bullish angle of attack of this market. I may of course finesse this to a shallower bullish shift pitchfork for the same move, but right now this works as it is, and we are in between the dark blue lower time below, which is currently at 49.67, and the dark blue middle time above, currently at 5600. So far today, what is seemingly turning out to be a reactionary move back up, seemingly utilizing the bright red upper trend of the ascending triangle as a base, as well as the 38.2% Fibonacci line, the big drop between late January and early February at 51.40. Bitcoin. A possible hammer pattern yesterday, and third bearish black crow, usually seen as a bullish reversal pattern a hammer is, after the previous session's bearish opening along black Mariposa and second bearish black crow. Now till this week, the market had been taking stock on what had been achieved on the downside and what is still lying open, and in the process has created a small dark blue sideways triangle, currently 66,012 to 69,161. Over February, and that's happened over February, possibly it could be regarded as an extended pennant pattern, but I personally favor the sideways triangle idea. The core of this pattern has been a rotation around the bright red neckline extension, currently at 67,524, to the August 21 to January 22 head and shoulders top pattern. So, a break lower this past Monday gave a primary target down in the 63,357 zone, with a secondary harder to reach target X down in the 58,017 zone. Now, as you can see, the primary target was easily reached, though the secondary target is now just under the early February low at 59,946. Now, going back to the bright red neckline extension, I had said last week, and I quote, "This bright red neckline extension is a key element in any moves lower, as it is a sentry ahead of the important 50% absolute Fibonacci line at 63,129, end of quote. Now this statement is still valid today, as this 50% absolute Fibonacci line halted the decline yesterday and had been a strong support this month, even though it had been breached earlier in February. It has still not been broken as yet, and as I warned last week, and I quote, "So please look for any confirmations below rather than just the one close. A common mantra in all such things," end of quote. In the bigger picture, we still have a very large October 25 to date bearish halfway hesitation in progress, with the primary and secondary targets for this pattern already achieved, leaving just the much harder to reach tertiary target X2 down in the 54,000 zone. Plus, there is another pattern, a bearish pattern that I would like to address, and one I had previously considered. It is a February based bearish cat's ears pattern. This is a small double top pattern that forms after a big drop, such as the one we had in early February. The key trigger for this pattern was the low 2 weeks ago at 65,080. Yesterday was the second consecutive close below this level, so I laid out yesterday possible targets below for this pattern of a primary target X1 down in the 59,223 zone, and a secondary harder to reach target X3 down in the 57,986 zone. Finally, as I've said last week, we have the potential showrunner for this recent move lower, this bright green early October 25 to mid-January 2026 bearish Andrews pitchfork, with the market today in between the overhead bright green upper time, currently at 76,791, and the bright green middle time below, currently at 54,362. Now, of course, I am prepared to finesse this bearish Andrews pitchfork into a shallower bearish shift pitchfork for the same move, should this be required. So far today, the bullish hammer from yesterday has kicked in for a move up over the April 21 high at 64,929, and a test up, though not as yet penetration in force, and just clipped it more than anything else, and that's of the previously broken dark blue lower trend line for the February based small triangle pattern.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Toftpick and ADM Investor Services International Limited. And here comes the final important bit.